Hello and welcome to Investflow. Today we'll be looking at Teladoc Health, one of my highest convictions and also one of my biggest positions in my personal stock portfolio. Teladoc was one of the high flyers and one of the growth darlings at the start of the pandemic. Since then they did a big acquisition, and after that with the whole growth drawdown they lost all of their pandemic gains and are even trading quite a bit below the pre-pandemic levels. So let's find out if Teladoc might be a good opportunity for a buy right now or not. Teladoc Health, ticker symbol TDOC, was founded in 2002. It currently has around 4,400 employees and is at a 10 billion market cap. The headquarter is in Purchase and the sector is telehealth and virtual care. Since 2017, the CEO is Jason Gorowick, who was also already in the company beforehand. If we take a look at the price chart, we can see that Teladoc was a gigantic success story from 2017 up until the first quarter of 2021. They had around a 1,200% gain and since then lost most of it and are only down to a 200% gain in the last 5 years. In the ownership structure, we can see a very prominent name at the top. We can see that the famous, or should I say infamous, ARK investment fund from Katie Woods has around 12% of the shares outstanding. Katie Woods and the ARK Invest Fund has been a very interesting topic over pretty much over the last 2 years. First being the darling of pretty much anybody outperforming everything, and now being down over 50% in 1 year. If we take a look at the analyst ratings, we can see that 12 of them have a hold position and 17 have a overweight or buy position. Every single one of the analysts has a upside on the rating, with the lowest upside being 25% and the highest being over 300%. Keep in mind though that some of these price targets could be a little outdated, especially considering that the stock price has fallen enormously and fast at that, with the whole drawdown in the Nasdaq and in general in growth stocks. So let's take a look at the different business models for Teladoc Health. Teladoc is the leading virtual care platform in scope, clinical breadth and outcomes. They are also the industry's only complete whole care suite for whole person care. They also offer a differentiated combination of digital and physician-led services and resources, and they are uniquely positioned to provide data-driven, tiered care that delivers better outcomes at lower costs. So they have a lot going on for them, and we'll dig into that more in the next slides. So let's take a look at the different sectors for Teladoc. The first one is the virtual whole person care suite. They are the leader in whole person virtual care, which basically covers all the different medical virtual care products and services that a person needs. Another big segment for them is mental health, where they have the market leader with Betterhelp. They also have a great solution for primary care, and they also offer complex care services. If we take a look at the different customers Teladoc has, most of them are a B2B2C relationship. So Teladoc sells to employers or health plans and hospitals, which then afterwards sell to the customer. So pretty much for the main part of the business, Teladoc is looking to improve the work that people can do, for example, for the employer. They of course want that their employees are healthy, so they take the services that Teladoc offers to keep them healthy and to reduce sick days, for example. So that's a value proposition for most of the offerings Teladoc has. They also offer single person services, for example their mental health services are B2C. So they do have a large variety of different channels too to sell the products. Another advantage of this is the incentive. Teladoc has the incentive to keep the user of their products healthy. They don't have the incentive to sell them any medicine, to sell them prescriptions or anything like that. Their only goal is to reduce sick days and keep people healthy, so the employer and the health plans will keep paying them for the most part. So really like the incentive here. We take a look at the different products they are offering. A lot of the time Teladoc is just referenced as a telemedicine company, pretty much a glorified Zoom for doctors that does nothing else than video calls. But that's not true at all. Since the IPO in 2015, they added a lot of different services like you can see here. They keep expanding the ecosystem, they keep expanding into new territories even. They are international at this point, even though the large majority of the revenue still comes from the US. But as you can see, their growth doesn't stop and they keep expanding the ecosystem to become the whole person care one-stop solution for chronic care, mental health care and virtual care, all in one. One of the biggest success stories for Teladoc over the last years has been Betterhelp. Teladoc acquired Betterhelp for a ridiculously low 5 million around 2016. Nowadays, Betterhelp contributes around, I think, 400 million to Teladoc's revenue annually. Betterhelp is the mental health service from Teladoc, which they sell business to customer, B2C. As you can see here, the digital version offers a lot of advantages over in-office therapy. A lot of the time, therapy has a stigma, and it also in general just has advantages to do it digitally. As you can see in these graphics, Betterhelp pretty much is the market leader by a long shot. The first competitor comes all the way down here and isn't really growing. The second competitor could get interesting in the near future. But also looking at therapists, they just have a dominating market position. They also get a lot of data from this, which they can use for their data science, which will be a common theme throughout all of their business segments pretty much. Everything is collecting data and is improving the algorithms. We also can see that they have some impressive retention numbers. For example, 86% of our members continue after the first session, and 97% of our revenue is generated by members who use Betterhelp for 3 months or longer. So they keep their members and they keep using the platform for a long time. This is especially important in areas like mental health, where there is still a big stigma in society. So online solutions like the ones from Betterhelp can really improve the outcomes for people and help them living a better life. The next business segment is Livongo. Teladoc did a huge merger with Livongo at the end of 2020. They merged with the company for around $15 billion, which is now more than the current market cap of the company since they fell as rapidly. Most of that was in stock, but also some cash. Keep in mind that the Teladoc stock was very expensive back then, so it is somewhat justifiable that they paid a high multiple for Livongo, since they paid with their own high multiple stock. With Livongo, they got one of the leaders with smart devices for especially diabetes care. Livongo also is great with data collection, since people will take blood samples every day, multiple times. So they are generating a lot of data points. They at the moment have over 1 billion data points just from Livongo, and the overlap between Livongo and Teladoc services is pretty small, so there is a lot of growth opportunities with cross-selling between the different products. So I really like the acquisition, even though it was costly for Teladoc. They also did another acquisition in 2020. That was the acquisition of Intouch Health. This one was a little cheaper with only around $1 billion. Still not a small acquisition though. Intouch Health is one of the leaders in hospital robots and technology. So they got a lot of different devices which improves the workflows in hospitals and enables, for example, virtual visits at the patient's beds, for example. And where this gets really interesting is with the relatively recent partnership between the Teladoc solo platform from Intouch Health with Microsoft Teams. So the thing is that the solo platform is now integrated into Microsoft Teams, and roughly over 50% even of hospitals in the US use Microsoft Teams as in their infrastructure. So with this partnership with Microsoft, they pretty much got into half of the hospitals in the country. The next segment we'll take a look at is the one that Teladoc is always associated with, the telehealth section. Telehealth means that people can do virtual visits for all different kind of needs they have to talk with a doctor. As we can see down here, telehealth is pretty effective. New patients get a visit in under 1 week. The average user has around 10 plus interactions with the care team every year. Over 50% of participants who have used these services have used multiple services of Teladoc, which also speaks for the huge cross-selling opportunity they have with their ecosystem. 25% of people who had diabetes or hypertension diagnosed were first-time diagnostics, and they have a member satisfaction of over 95%, and they also do have a high net promoter score. We can also see that the total US healthcare spending has a ginormous total addressable market. Obviously, not everything here is a market for Teladoc, but the addressable market is still huge with around 200 billion and growing fast. Teladoc currently has the capabilities to capture around half of that, but they could get even more of that in the future with their expanding ecosystem. So even if Teladoc can just capture a part of this huge spending, they will have a ginormous revenue opportunity in the future. Teladoc is the market leader with around 13% market share before competitors like Doctors on Demand and American Well with around 3% and lower for each. Teladoc has around 76 million members. They have around 10,000 providers, around 12,000 corporate clients, the aforementioned Net Promoter Score, which measures how likely people are to recommend or to not recommend a product, is 60 plus, which is really good. They are the number one in app downloads for the segment and the number one in the JD Power Ranking, which also tracks satisfaction with a product. They have around 2 billion data points already and are certified as a great place to work at. With the Livongo acquisition, they right now have over 800,000 connected devices which keep generating these data points. Something that's also very important about their market position is that they have the largest network of physicians with over 55,000 physicians in their network. The competitors like Doctors on Demand and American Well have around 1,400, but with that you have to keep in mind that Teladoc does not actually employ these physicians. It works like a gig for them, so they can decide to work when they have time for Teladoc, but they are not hired by them. Doctors on Demand and American Well, on the other hand, actually hire the people, the physicians, so they do a lot more visits per physician there. As you can see here, the average Teladoc physician does around 200 visits, while the average Doctors on Demand or American Well physician does over 4,000. So even though Teladoc has the largest network, they only have around double the total visits than the competitors. They are growing faster though. And especially in the future, I think the gig economy also works for the physicians. One of the big competitive advantages for Teladoc, in my opinion, is their personalization. Pretty much all their services collect a lot of data, so they can plug all the data into an algorithm and get some great feedback from that, and make predictions and give the people nudges to improve their habits. The great thing also is that people have 3 different entry points into the system. For example, they can get into the system via chronic care, via virtual medical care, or via mental health care. And since all these services are part of an ecosystem, they are likely to start using other services too, which then again works as a flywheel and will increase the amount of data, which increases the amount of personalization and the amount of effect they have. So yeah, this is one of the main competitive advantages I see with Teladoc. Like I already mentioned before, they're going for an ecosystem approach, and especially with an approach where people have different entry points to the system. Through the app, through the digital front door, like they say, people get into the system either through chronic care, through mental health care, or through virtual care, and then they are stuck in the system using more systems, using value-added services, just in general being there and enjoying the advantages of the algorithm feeded by all the data they are collecting with all of their millions of users throughout the years. Another look at the ecosystem Teladoc built over the years is this nice graphic from Viewpoint on Twitter. We can see that under the Teladoc Health umbrella there are roughly 6 different brands in 5 different sectors. There are Betterhelp and My Strength, which are both in the mental health segment. We have Livongo, which offers a lot of different services and devices in the chronic care segment, for example, diabetes and hypertension. Then we have the legacy Teladoc business, which offers a lot of telehealth services, but also new solutions like the Primary 360, which offers a whole person care solution. Then we also have Healthier You, which pretty much is a platform for people to compare different insurances and different offerings around your healthcare needs. And then lastly, we have Intouch, which is the solution for hospitals and operations, surgeries, I mean. So they have a pretty diverse and big ecosystem, which is also part of their moat of their competitive advantage. Teladoc also showed a nice slide in one of their recent investor presentations about their moat. They compare themselves with different types of competitors, like video conferencing platforms, for example Zoom, like traditional telehealth solutions, like CCM, point solutions, big tech, hybrid VPC players, and national health plans. They pretty much outlined where they are the leader, which is clinical expertise and experiences in one-to-many care delivery models, in whole person clinical scopes, and in best-in-class engagement. They also have a great edge on data and the data science behind it at scale. They have a purpose-built virtual care platform, and they are a global leader across distribution channels and are a trusted consumer brand, as can be seen by the Net Promoter Score and the JD Power ranking, for example. I often hear people asking, but what's the moat for Teladoc? Besides the slide they gave us here with what they consider to be their moat, I also think we shouldn't forget the size of their physician network and also the breadth of their portfolio. All of these offer a great moat in my opinion, and will protect them from competitors now and also in the future. Teladoc recently outlined their guidance on growth for the next years. They are expecting their virtual medical care segment, which currently attributes around 35% of revenue, to grow at a compound annual growth rate, a CAGR of between 10 and 20%. The mental health care offering like Betterhelp and My Strength attributes around 40% currently and is expected to grow with a 30 to 40% CAGR. So we can expect this segment to be around half or even more of Teladoc's revenue going into the future. The chronic condition care segment is around 25% currently and is expected to grow at a 25 to 35% CAGR. The consolidated growth from all these segments is around 25 to 30%, coming on top of the already elevated levels of growth they saw from the pandemic. Teladoc has a lot of different customers and partners, which includes a lot of the big healthcare plans, some insurances, and also other partners. The interesting thing with Teladoc is that they are not owned by any of the big healthcare plans or any biased parts of the healthcare system. So nobody really would decide to not use Teladoc because they are owned by a competitor. This is the fact for some of the telehealth competition Teladoc has, which gives them a competitive advantage since they are agnostic to pretty much anybody and they are willing to work with anybody. Before I go into the numbers of Teladoc, I would kindly appreciate if you could like the video and subscribe to the channel. I would also appreciate any comments or questions you have down in the comments below, and I hope you enjoy the rest of the video. We take a look at the last full year numbers. We can see that revenue almost doubled for Teladoc. We can also see that net income and EBIT fell sharply from around minus 100 to minus 500 million. This is mainly due to the big merger with Livongo and also the InHealth acquisition. Most of these expenses are share-based compensation though and other merger-related things. So if we look at free cash flow later, it will paint a very different story. The equity in line with the goodwill from the acquisitions increased by 1,500% to 16 billion. But since it's mostly goodwill, it's not really too interesting in my opinion. It also drove the equity ratio up though to almost 90%. Since they don't have a positive net income, the return on equity is negative. The gross profit increased by 91% to around 700 million. In the last quarter we can see that they had a lot of advertising, marketing and sales expenses. This is because they recently launched the Primary 360 offering, which they are heavily marketing now. A lot of the offerings they are selling to the big health plans have a very unusual sales cycle. So most of the plans get executed or start to actually be implemented in the new year. So it doesn't really represent too much in the revenue yet. So it will be really interesting to see the full year numbers which are releasing next week. So I'm looking forward to that. We take a look at the free cash flow. We can see that most of the time Teladoc is a cash flow positive company. So they don't have cash burn to worry about. And this is also a per share view because Teladoc did dilute shareholders quite a bit with the merger with Livongo. But as we can see, without the big merger expenses down here, cash flow is going to the right direction. And it will be interesting to see if this uptrend continues and if they can scale free cash flow going forward. Now I want to take a look at the key performance indicators for Teladoc. There is a lot of misunderstandings about what metrics to look at for Teladoc. I pictured 4 of the most important ones in my opinion here. The first one is PMPM, which stands for per member per month. So this is pretty much the amount of money they get per member in their program every month. This number increased by over double over the last year from $1.18 all the way to $2.57. Another important metric is the utilization. This basically means Teladoc offers a lot of its services to big employers. So let's say they have a company with 1,000 employees who all have the option to use Teladoc services. The utilization stands for how many actually use it. So if for a 1000 employee company we have a utilization of 16%, it means that 160 people actually use it. This also is a reason why revenue is increasing, because the more utilization they have, the more they get paid. And as we can see, the utilization has been on a steady uptrend, growing from 16.5% all the way to 23.7% through the last year. Another important metric is the amount of visits. This is pretty much just showing that they aren't just a pandemic winner. Since the pandemic peaked around Q3 of 2020, they managed to keep growing US visits and also international visits on a fast pace compared to competitors who actually lost market share at the same time. Then there is also the Livongo membership data points, which also almost, even more than doubled, growing from a little under 1 billion to pretty much 2 billion. All these data points will help making the data science algorithm they are having better. So these are my personal key performance indicators, which I think are very important to track for Teladoc. The aforementioned PMPM gives a huge opportunity to Teladoc. They laid out a little roadmap here. They estimate that Primary 360 could have a PMPM of between $25 and $40. This would be the lowest though, with the other solutions ranging from 30 to 40 all the way up to $50 to $110 per member per month. So in theory, with the current member base of around 70 million people, they could reach a total revenue of over 100 billion. Of course, they won't get a 100% utilization for all of these, but it just shows how much of a growth runway there still is with the current existing member bases. A lot of people keep getting scared that Teladoc isn't really growing paid members a lot, and that actually causes stock to sell off after 2 different earnings. So I put up some Excel spreadsheet to talk about the levels of growth for Teladoc. This includes the KPIs that I mentioned, utilization and PMPM, and also a using members which I calculated. So paid members after the initial pandemic spike from 43 to 51 million members didn't really increase a lot. So from Q1 to 20, from Q1 20 to Q3 21, the paid members only grew by 22%. Meanwhile, utilization went from 13.4% to 23.7%, meaning they grew by around 77%. The PMPM grew a ridiculous 200% even. And that means the using members, which is paid members multiplied by utilization, grew by 115%. So in total, they had an increase of 115% for the members that actually use the product, while the revenue per member per month increased by almost 200%. This resulted in total revenue increases of almost 200%. So this is why Teladoc has several different levels of growth, and why management really should stop talking about the amount of paid members, because the others are much more important in my opinion. If we take a look at the evaluation, we can see that pretty much every metric came down a lot. The enterprise value to gross profit currently is around 8.6. In 2020 it peaked around 60, and on average it was in the 20s. The price to sales ratio is around 5.6. In 2020 it peaked around 35, and on average was around 12 to 15. So some of these metrics are even below the pre-pandemic levels, which is just wild considering how big of a profiting company Teladoc was of the whole pandemic situation. The price book value looks very undervalued with a 0.7 value, but keep in mind that this includes a lot of goodwill, so I would ignore this in the valuation of Teladoc. And the Petrosky F-score is roughly in line with the average of 4. If we look at the last years, we can see that revenue grew sharply, growing almost 800% in the last 5 years, which they even doubled again in 2021 once the full year numbers release. The net income, on the other hand, kept getting worse, but once again, the big downside in 2020 was largely due to the acquisition and the merger of Livongo. Take a look at the revenue distribution. We can see that almost 90% are access fees, 11% are visit fees, and 2% are others. Currently, most of the business for Teladoc is in the United States, with only 7% outside of the United States. The debt situation looks pretty good for Teladoc actually. They have a net cash position of 800 million on a market cap of 10 billion. They have equity of 16 billion and liabilities of 1.7 billion, which means a debt to equity ratio of 11 billion. But once again, a lot of the equity is goodwill, so keep that in mind and take it with a grain of salt. Taking a look at the guidance throughout 2023, we can see that the company is expected to keep increasing revenues sharply. They are also expected to stay at a negative net income, which I don't really think will be the case that severely at least. I think around 2023 they should approach the break-even point, since they are already cash flow positive and most of the acquisition charges and leftovers will be done at that point. So I don't think these are accurate projections, but only time will tell. So let's summarize Teladoc Health. They have a great positioning with a market-leading position in a lot of different segments. They have high growth rates, which will continue for at least the next 4 years. They have the largest network of physicians and members. They are in a big future trend with virtual care and mental health care. On the other side though, they do need to integrate a lot of the acquisitions because they did quite a few over the years. And with that comes a lot of dilution. It is also unclear how the whole sector will develop since it's still pretty new. And there are also many financially strong companies in the healthcare sector. Let's take a look at the Moat. I don't think the technology is too impressive for the most part, besides the data analytics. They do have pretty much the best brand though, judging by things like the Net Promoter Score and the JD Power ranking. And they also have a lot of experience since they have been operating in at least the telehealth business since 2002, even though it was done with telephones back then and not with video calls. But still, they are very experienced in the field. Now let's take a look at my outlook. Teladoc has by far the largest physician network. Keep in mind though that they have it as a gig setup and not as hired employees. Teladoc has a high margin business with gross margins approaching the 70%. They have the potential to dominate the market completely with products like Primary 360 and their breadth of services. They are expected to grow at high rates going into the future. One of the big downsides is the high dilution, which pretty much doubled the share count throughout the pandemic with the acquisition and the merger of Livongo. The healthcare market in general is very difficult to assess since there are many very big players in a lot of different parts of the market. It's a very, very big market, and yeah. On the other side, again, Teladoc is cash flow positive, so even though they are writing net losses, they aren't burning cash. So to conclude, I think that there is a substantial and a sustainable upside potential in the stock, even though there are quite a few risks. And as I mentioned before, I personally own Teladoc and it's one of my highest convictions. It currently is my second largest position in my personal portfolio with around 8%. So once again, thank you for watching and please consider liking the video and subscribing to the channel. Please also leave a comment and hope you enjoy the rest of the day. See you next time.